DailyFX BYOA contest for week 22. It's trading week of August 21st to August 26th, 2011. What I'm looking at right now is the US dollar on the 4-hour time frame. This is the US dollar offered by FXCM, which is available to be traded on the FXCM platform. And what I'm looking at right now is I'm kind of looking at what could possibly happen this week in regards to the US dollar. I think this is a huge week for the US dollar. Tons of data coming out towards the end of the week. We also have the Jackson Hole going on Friday. Ben Bernanke will be speaking there. There is some growing speculation that he may talk of QE3. And coinciding with that, we've got the GDP figures coming out the same day. So just all together, a lot of fundamental news is going to be coming out, and the dollar's really going to need to kind of pick a direction, and it's really going to need to go somewhere while this is all going on. So just kind of want to talk about a few things here. From a technical basis, last week and the week before, actually towards the beginning of August, we kind of had a triple top formation here. And that was kind of the extent of the run that we had, and then we kind of broke lower, and we've been moving back below into this trading range. I've identified a few of the key swing highs and lows here, as you can see here. This 95.20 level has been pretty solid support, which could be considered our horizontal base for the triple top. We retested that and came back lower, and then if you go back a little further, we had another test of that kind of in the beginning of July. So that 95.20 level, now that we're below it, is proving to be pretty difficult resistance of any further dollar gains. I also drew a Fibonacci here, and as you can see, the Fibonacci I drew from basically the beginning of our run up, and what I'm looking for is some sort of retest of some retracement level and then a bounce back up and an extension going forward. Now, if that happens or not, it's hard to say right now. But what you can see here from a technical basis is that we did get a retest of the 96.4%, which is down here, and also we're kind of hanging around the 61.8%. So fairly decent resistance that we've got going on there. Another key thing I want to talk about from a technical standpoint here is if you measure the distance of this triple top and then the break below that horizontal base there at 95.20, we got about 160 points if you measure it. That's basically the measurement from 96.80 down to 95.20. So the break of that gives about 160 points. Not surprisingly to me, as someone that I consider myself much more of a technician, it's not surprising to me to see that break from 95.20 back down all the way to 93.80 almost got us about 160 points. So usually when you've got a break like this, you want to measure the vertical distance and then project it downward, and we hit that quite well. So it was nice to see that, and it was also pretty interesting that it hit almost nearly exactly the way it was supposed to. So basically, what we're looking at here from a technical standpoint is we need to see a sustained break above 95.20 or potential retest of the 93.35. I mean, right now there really is no clear, consistent direction. In fact, I may argue for a little bit of dollar weakness going forward, maybe in the first part of the week, but really it would be difficult to test this. What you really want to look for is the 95.20 level and the 93.35. Now, one thing you can do is also pay attention to what's going on in the stock market. This right here is the MetaTrader platform offered by FXCM, and these are the CFDs that are available to be traded, I believe, only for people outside of the United States. But basically what you're looking at right here is the S&P and the Dow. We've also got some oil, got the oil CFD here, and a couple of the other things. But basically what you're looking at here is I drew a retracement from the run down we had in the S&P, and what I'm looking for is again another retracement. Now, if we are going for dollar strength here, what we're doing is kind of looking at an inverse chart here. Okay, so we want to see further S&P weakness, and that's going to correlate into further dollar strength. Now again, you need to look at the key levels here before you really decide to jump in any which one direction. So for example, if we're looking for a break of the 95.20 going upward in the US dollar, we may look down towards maybe the 1100 figure, which would be right around here. in the S&P. Okay, so what we're doing really is we're just kind of compiling all these different indicators and all these different tools to help us analyze, where we're going to be here towards the end of the week. My sentiment right now is definitely bullish dollar. I think what you could see happen is the market, like today is Monday, and you're hearing bond traders talk about QE3, the possibility of QE3. What you could see, a bad case scenario for the stock market could be something like, this speculation of QE3 keeps building. Bernanke shoots down the idea of QE3, and also we see GDP figures miss expectations by a decent percentage or whatever it may be. Okay, so that would be obviously really bad for the S&P and Dow. They would take a big hit, and then as related to that whole thing, we would see the dollar get stronger. The alternative scenario, and I doubt this would be a viable alternative, but what you could see is GDP figures hitting expectations or maybe exceeding it. Bernanke maybe gets a little bit more serious about QE3. It just really depends on what he has to say and what the GDP figures are like. Right now, the way I'm feeling about the GDP figures is that they're going to be awful. And why I think they're going to be awful, or maybe not awful, that might be a strong word, but I think they're not going to be very good. And the reason why is if you look at all the other countries in the world, everyone is really missing expectations. I mean, Japan obviously in the negative, like they've been for a while. Germany's missed, France missed, even in Israel, a high growth place, their GDP is contracting big time. So I don't have much hope, really, for the U.S. GDP to be coming in at flying colors. I really don't think it's going to be that great. And it depends on how the stock market takes it. If it takes it in a negative light, you could see that dollar jump off. You could see a clear break of that 95.20, and we could see a solid run. Again, this 95.20 level is really acting as resistance right now, but the moment we break above that, it will turn into support, and it will allow us to support us in further gains. So there's a lot to look forward this week. Obviously the FXCM calendar is full with a bunch of things. Obviously you got the German confidence sentiment coming out. Durable goods is another big one. And then obviously the GDP and the Bernanke speech coming at the end of the week. Those are all major things to look for. Again, I'm bullish on the dollar. I kind of think this trading range we have right here is going to give way, and we are going to get a substantial move above 95.20. And then if you want to relate that to the currency market, the first place I would probably want to look would be maybe the Australian dollar or maybe the Kiwi, just due to the fact that they're a little bit more riskier assets, and when the dollar is getting stronger, those, in my opinion, are going to be the first and probably the quickest to fall. Pretty difficult, pretty quickly. The euro would obviously be much more difficult to trade because the euro has been climbing despite what's been happening in the stock markets. So I would focus on maybe the higher yielding currencies as they're more likely to fall. So that would be the Australian dollar and the Kiwi. So that's my analysis for this week. Thank you for watching, and good luck trading this week.